as you can see, a very smooth curve. If you look from 2005, very gentle, but come 2020, we start seeing significant lack of smoothness. It's not as really as smooth as it was and that is customer deposit. So we need to look and pay a little bit of attention from 2023, 2024, a huge stagnation. Is that a stagnation? Maybe not, from a customer's point of view. That might the issue of the reporting currency. You'll see Kenya shilling strengthened from 160 to 130, and that's significant. It's reflected or impacts the reporting number. So we'll guide you what the actual number would be in a constant currency. Very confident about the future. As you can see, we increased dividend from 4 shillings to 4 shillings and 25 cents. The capital is big. We don't need leader. We need to start. These are difficult times. It's not only difficult to organizations, but also to shareholders. So how much do you invest in shareholders? You don't just look after staff, you also look at your shareholders. There are many stakeholders you need to balance relationships on. And the dividend payout becomes a record dividend of 16 billion shillings. And we hope this will not only go to the shareholders, but will be felt at the economy level. And dividend yield per is at 850. So the 4 shillings and 25 cents is of a share of 0.5 shillings. That's the value of an equity share. The par value is not 5 shillings like most of the shares we compare with. Ours is a 50 cents. That's the par value. That's really the money we get from a shareholder as the capital. But you are, for 50 cents, you are giving 4 shillings and 25 cents in a year. I hope shareholders can see how the yield for your plant is. But going forward, what really we focus on is the ratios. How are the ratios? As you can see, the ratios tells us the health of the organization. Analyst, this is your page. PAR, as we can see, we've come down to 12.2. Coverage, we are at 71, higher than last year it was 67. So we are, despite improvement in quality of loan book, we have increased, and of course, loan deposit ratio, the lowest we have seen in many years, below 60, core capital at 17 and 19. When you look at core capital and total weighted least capital, 14 and 19, 8 and 17, 10 and 17, it shows how capitalized we are, and that's why we are willing to pay out dividend generously to the shareholders. And as we said, look at liquidity at 57. So Alex, if we go 2 slides back, we then are confident, sorry, no, 1 slide forward. So we increase our profit from 43.7 billion to 48.8 billion. That's after tax. But before tax, we increased our profit from 51.9 to 60.7 billion shillings. We're very, very confident. How do we look at the past? Alex, if we can go at the forecast. The first one is to look at what had we given as a guidance. We were very optimistic that we could grow loans at between 2% and 5%. We missed the target. Our loans shrank instead of growing. We were optimistic we would grow our deposits between 7.5, but to 7, we only grew by 3%. And this is what we are talking about. We are operating in a very turbulent environment. If you look at those numbers, particularly deposits, we might be the best in the industry. Everybody else has shrunk in deposit. It's difficult times, but we've been very, very resilient. As I said, this picture is because of the structure of, and in summary, so that people can understand how our balance sheet was. Interest capping, the shock, made us unable to lend to unsecured borrowers. So what did we do? We bought into government stock at 10, and then the cost went all the way to 18, but your interest on treasury bills remains at 10. We bought Eurobond at 7 interest rates, so cost went to 12. You're getting negative. The good thing, we have seen significant reversal. The central bank rate is where it was before the peak, so that is normalized, and you see a normalized performance when we report the first quarter. And that explains why, despite missing the targets for last year, because of 6 simultaneous shocks, which we couldn't be able to really predict when they could hit, we are now more confident. We have built a resilient team, a resilient balance sheet, so we are optimistic that this year we'll grow our loans by between 10 and 15%, deposit between 10 and 15%, and we will test this in the first quarter, which we will be reporting in just about a month's time. And that also explains the interest, net interest margin. We're optimistic. We will enhance that. Non-funded, we are optimistic that we'll still be able to retain above 40%. And now we are confident that because we have seen stabilization in cost, interest expense is likely to come down significantly. We are confident we'll be able to be below 48. Return on equity, we had projected 25 to 30. We landed at 21.5, and we could tell the reasons. Return on assets. So our optimism and confidence in the future has not been affected by the turbulence. It's reinforced by the strategy, the capacity of our people, and more importantly, at how we have been able to adjust the bank.